What if I told you that right now, today, you could walk into the housing market, put a down payment on your dream home, and never have to sell a single Satoshi of your Bitcoin? No massive tax bill, no forced liquidation, no choosing between your stack and your future. Hey everyone, welcome back to The Block Analyst, your no BS destination for deep dives at the intersection of blockchain, real estate, and the future of finance. And today we are going straight to the source, the official announcement from Coinbase and Better Finance to break down the brand new product that just dropped and is already shaking up the entire $50 trillion US housing market. This is not another DeFi experiment. This is a Fannie Mae-backed conforming mortgage that lets you use BTC or USDC as collateral for your down payment, get your house, and keep your crypto. If you're a crypto holder who's been priced out of real estate, or you're just curious how TradFi and crypto are finally merging, buckle up. This is going to be one of the most important videos you watch all year. But before we dive in, let's get the formalities out of the way. This video is for educational and informational purposes only. I am not a licensed financial advisor, mortgage broker, or tax professional. Nothing I say here constitutes financial, legal, or investment advice. Crypto and real estate both involve significant risk, including the potential loss of your entire principal. Always do your own research, consult qualified professionals, and only make decisions based on your personal financial situation. Past performance is not indicative of future results. The Block Analyst and its affiliates do not endorse any specific product and receive no compensation for this coverage. Okay, let's get into it. All right, let's start with the fundamentals, because you can't understand why this new service is revolutionary unless you truly understand what a mortgage actually is. A mortgage is far more than just a loan to buy a house. It is a secured, long-term debt instrument where a lender provides you with the capital to purchase real property, typically a home, and you pledge that very property as collateral. In exchange, you agree to repay the principal plus interest over an extended period, most commonly 15 or 30 years, through fixed or adjustable monthly payments. The lender holds a first lien on the property, meaning if you default, they can foreclose and sell the house to recover their money. In the United States, the gold standard is the conforming mortgage, loans that meet strict underwriting guidelines set by Fannie Mae and Freddie Mac. These are the loans that get packaged into mortgage-backed securities, sold to investors, and keep the entire housing finance system liquid and stable. That's why conforming loans usually come with the lowest interest rates and the best terms available to the average American. They are the safest, most regulated path to home ownership. Until now. But here's where the traditional mortgage world has been broken for the crypto generation. Over the last decade, 52 million Americans have poured billions into Bitcoin, Ethereum, USDC, and other digital assets. Many of them are sitting on life-changing, unrealized gains. Yet when it comes time to buy a house, they hit a brick wall. Why? Because traditional lenders demand cash for the down payment, usually 3 to 20% of the purchase price. To get that cash, you had to sell your crypto, triggering immediate capital gains taxes that could wipe out 20 to 37% of your stack, depending on your bracket. Worse, you lose the future upside. You sell the Bitcoin that could have 5x'd or 10x'd in the next bull run just to put a roof over your head. On the flip side, pure crypto-backed loans from DeFi or even Coinbase's own Borrow product come with aggressive loan-to-value ratios, margin calls, and instant liquidations the moment Bitcoin dips. One bad week in the market and you could lose both your house and your collateral. That's the painful trade-off the industry has forced on people for years. HODL your crypto or buy a home. Pick one. Direct from Coinbase's official blog and Better's press release released just hours ago on March 26, 2026, Better and Coinbase have launched the first ever token-backed conforming mortgage. Powered by Coinbase's custody infrastructure and originated and serviced by Better, the AI-native mortgage giant, these loans are fully backed by Fannie Mae. That means they follow the exact same rules, underwriting standards, and consumer protections as any traditional 30-year fixed mortgage you'd get at a bank. Here's exactly how it works, step by step, no fluff. You qualify for a mortgage with Better the normal way. Credit score, income, debt-to-income ratio, all the usual checks. Instead of wiring cash for the down payment, you pledge BTC or USDC sitting in your Coinbase account. You still own them, you're not selling. Coinbase securely transfers the assets into a dedicated custody wallet managed for the program. You still own them. You're not selling. Better uses that pledged collateral to fund the cash portion of your down payment. You close on a standard Fannie Mae conforming mortgage for the rest of the purchase price. You make your monthly mortgage payments in good old US dollars, just like always. For USDC holders, you continue earning your rewards while it sits as collateral. And here's the part that changes everything. There are no margin calls or price-based liquidations. This is not a volatile DeFi loan. It's a conforming mortgage. The only way you lose the collateral is if you default on the mortgage payments for the same period any traditional borrower would, typically 60-plus days of delinquency. Crypto volatility does not trigger an automatic fire sale of your BTC or USDC. Now, as someone who's analyzed real estate markets for years and watched crypto evolve from fringe to mainstream, let me give you the unfiltered pros and cons for the average person. The massive pros: tax efficiency on steroids, no taxable event when you pledge instead of sell. You keep every Satoshi of your unrealized gains working for you. True HODL power. Your BTC or USDC stays in your portfolio, capturing every future upside while you enjoy home ownership today. Democratized access. Millions of crypto-rich but cash-poor Americans can finally enter the housing market without sacrificing their financial future. Same consumer protections. Fannie Mae backing means the same foreclosure rules, same servicing standards, same transparency you get with any bank. Lower barrier to entry. Down payments that were impossible in cash become possible with digital assets. The honest cons and risks, and yes, they are real. Higher effective cost possible. Innovative products often carry a slight premium in interest rate or fees. We'll watch the first deals closely. Default risk is amplified. If life happens and you miss payments, you don't just lose the house. The lender can seize and sell your pledged crypto too. Double exposure. Indirect volatility impact. Even without liquidation, if your overall net worth is heavily tied to crypto and the market crashes, making those fixed monthly payments becomes psychologically and financially harder. Availability limited. Right now, this is US only for qualified borrowers who meet Fannie Mae guidelines. Not every property or every state will work immediately. Custody risk. You're trusting Coinbase's custody and Better servicing. While both are top tier, it's still third-party risk. Early days. We don't have years of performance data yet. How will servicers handle disputes? How fast will approvals be? These are unknowns. This product is not risk-free, but for the right person, someone with strong cash flow outside of crypto, a long-term HODL mindset, and solid credit, it could be one of the smartest financial moves of the decade. Imagine this real scenario. You bought Bitcoin at $20K. It's now worth $70K. You want a $500,000 home. Traditional route, sell $100K of BTC, pay $30K in taxes, and kiss the future gains goodbye. New route, pledge the equivalent BTC as collateral, close on the house, keep stacking, and let the mortgage ride. Game changer. But I want to hear from you. Would you use this product, BTC or USDC? Drop your thoughts in the comments right now. Are you bullish on this fusion of crypto and real estate, or do the risks scare you? Let's discuss. If you're new here, hit that subscribe button and the bell. We cover every major intersection of blockchain and traditional finance with zero hype, maximum depth. Smash the like button if this breakdown helped you understand the biggest housing innovation of 2026. I'll be back with follow-up videos as the first loans close and we get real borrower data. Until then, stay informed, stay sovereign, and I'll see you in the next one. This is the Block Analyst, signing off.